Today, the stock market index dropped lower than it has been in over 4 years. Many Wall Street investors are hoping this is just a blip. Bloomberg said it's mostly seen as a premature call for a recession, while others are wondering whether they should sell their shares. Fox News' Kelly O'Grady has more on the national impact.
I don't know if this is the start of something really deep like a recession or whether this is one of those blips.
Investors on Wall Street hoping Monday's sell-off is just a blip. Global markets nosedive following Wall Street's slump on Friday after a series of reports showed the economy softening. The Dow Jones Industrial Average and the Nasdaq were both down more than 1,000 points at the start of Monday's trading session on Wall Street. The U.S. markets reacting to a bloodbath in Japan. The country's stock index suffered its worst day in nearly 40 years. The Nikkei, now in a bear market, falling more than 12%, its worst plunge since the Black Monday crash of 1987. Now, July's weaker than expected job growth has investors bracing for the possibility of the economy skidding. The latest jobs report came in weaker than expected, with only 114,000 jobs added in July, and the unemployment rate jumped to 4.3%. Now, Federal Reserve Chairman Jerome Powell now being urged to cut interest rates as early as this week to soothe investor fears of a possible recession. Investors say the Fed hasn't moved quick enough on slashing rates despite the fact inflation has cooled from its peak in the summer of 2022.
The Fed is behind the 8 ball here. There's no question they've waited too long.
There's speculation the Fed could be cutting interest rates by 0.5% in September.
We've moved from a problem of inflation right now to deflation in prices, and I think the Fed has to act to stop that.
Now, the Fed can step in and make an emergency interest rate cut if needed. In New York, Kelly O'Grady, Fox Business.
Wilbert Hamilton, senior advisor with Hamilton Wealth Advisors here in Huntsville, shares how some tips that you can handle this positioning of the stock market index.
The first thing you need to do, and any and everybody, is speak with a financial advisor, talk to a professional, and actually understand how you need to invest. Because a retirement account versus your individual investments and savings are two different total buckets. If you're 35 years of age and you have 30 years into retirement, we would invest that money one kind of way. And then if you're all of a sudden, you're 55, 60, you're trying to retire in the next 2-3 years, that money should be, managed, totally differently. So the biggest thing is getting that professional help and understanding what to do, when to do, and how to do it.